Trading floors in China will remain closed till Thursday for holidays, whereas markets in South Korea were closed on Monday. This is why traders are mainly focused on the NonFarm Payrolls report, which is due on Friday. Until then, trading activity is likely to be moderate. Watch our video review and find out what's going on in the Asian session. The US dollar has fallen against a basket of 6 major rivals, retreating from the one-year high reaching last week. Perhaps its weakness is attributed to the fact that traders are anticipating non-farm payrolls data at the end of the week. After all, this report may provide clues about the Fed's next move, yet the decline was short-lived. The US dollar index is already recovering within the previously predicted range. Now it's trading at the level of 94. The US currency is likely to remain in the same range of 93.80 and 94.30 for some time. The dollar-yen pair shed 13 pips yesterday following the fall of the S&P 500. This morning the Nikkei index decreased by 3.25%. Surprisingly, the yen is holding steadily, recording after yesterday's decline. Still, the pair is unlikely to grow further due to the headwinds in the stock market. Today's growth is probably just a correction after a strong 3-day fall, so the nearest target for the pair is at the level of 110.67, which may be hit quite soon. Let's have a look at the AUD USD pair. Today, Australia unveiled the retail sales report. It showed that retail sales fell by 1.7% compared to August and after a strong drop of 2.7% in July. So far, retail sales have been decreasing for the third consecutive month due to coronavirus restrictions. Naturally, the Aussie benefited from relatively positive retail sales data. On Monday, the Australian dollar rose by 21 pips. However, today, in the Asian session, the price almost returned to the opening levels of the week. This morning's decline is seen as a correction after the previous 3-day increase. So the Aussie is trying to approach the range of 0.7340 and 0.7390 front in the July-August of this year. To sum up, the non-farm payrolls report, which is due on Friday, is expected to show a further improvement in the labor market. According to the forecast, the economy added 460,000 jobs in September. If this forecast turns out to be true, the Fed will have one more reason to trim its bond purchases until the end of the year. Market sentiment on the US dollar is getting more bullish in recent weeks, with the net long positions rising to the highest level since March 2020. And that's all for now. We wish you profitable deals. See you in our channel with a new video in a couple of hours.